Welcome to Chris and Carlette Live, a podcast about life, love, and overcoming obstacles. Each week, we discuss the good, the bad, and the indifferent of life's interruptions. Now, here's your host, Chris and Carlette.
Keep believing, don't go stressing, keep it moving. God, we're resting, here to help you, here to bless you. With God on our side, see life.
Hey, yo.
Hello, everybody.
It's us.
Yes.
It's the Chris and... you're on
See,
mute.
you muted me. It's the Chris
Well,
show.
you know,
Chris show.
sometimes being muted may not be bad at all.
Okay. Okay. I guess.
I'll just play.
Let's show you.
Welcome, y'all, to the Chris and Carlette Live Show. This is us. We are we, and you are you. And there we go. What did you do over the weekend?
Whatever you did.
Whatever I did. So, on March 3rd was our eldest son's birthday. So, we drove up to Huntsville, not only to see him, but to do some ministry stuff. But we enjoyed spending time with our son.
Yeah.
Christian turned 19. He's 2 years away from being grown. Wonder what's that going to look like come 2 more years, 2025. But we nonetheless had an enjoyable time with our son celebrating his 19th birthday. What else did you do?
We had the honor and the privilege to witness a marriage.
Oh, okay. We did that too.
We had the honor and the privilege.
We officiated.
Yes.
Hold on. Let me get the photo ready.
I thought that's where you were going.
No. I didn't know. Let's see. Here we go. We're gonna drop that right here.
Hello, Miss Watkins. So good to see you.
Then we're going to go to desktop and let's see if that's the correct one. That is the correct one. We spent several months speaking to this young couple, speaking into their life. I always get her name. Navinity and Chris and Navinity Clark is their new name. But we had the enjoyable time of counseling them, or not counseling, but giving them marriage advice and guidance. And we had the opportunity to marry this lovely couple. And here we go. Our very first. There we go.
Our very first.
We went to the courthouse and did our thing.
Our covering, our oversight, gave us the permission, gave us the oversight, and with our credentialing and everything. And so it was an honor. This was a first of many. And we honor the Lord for this opportunity. We don't take it lightly to not only discuss the importance of marriage, but then to actually, my husband was the officiant. I was the
co-efficient.
Officiant.
The co-efficient.
I was co-efficient.
Because the efficient would be math.
Right. And so, yeah, that happened, and just overjoyed. And,
yes. Congratulations to them.
The Clarks.
Congratulations.
The Clarks.
Yes. Yes, the Clarks. And I'm pretty sure that they had a great time after their their what? Because they went to what?
They went out. They did a getaway. Yeah, they did. We're gonna call it a getaway.
And they did that.
You know what?
And then wait a minute.
See, it must.
There you go.
That's sparkling cider.
That's sparkling
cider.
cider.
Okay. But I just want to thank everyone that has joined us on YouTube and Facebook. And just to let you all know, all those
Pastor Diggs, Willie Diggs is
Pastor
on.
Diggs, hello.
Pastor Diggs. He just celebrated his birthday a couple weeks ago.
he
Pastor
did.
Diggs, man, is coming up in the next couple of weeks. Too.
Yes, and hey, he was honored again. He got another award over the weekend.
What's that?
I can't think of the name. It starts with an R. I do know, but
Put it in the chat.
This is like 2 awards in 1 month. First, he was honored by Phi Beta Sigma, his incorporated, his fraternity.
What is that?
Don't start. The blue
Phi
and the
Beta
white.
Sigma.
Yeah, finer. No, that's the Zetas. They're sisters. But finer womanhood.
Phi Beta
But
Sigma.
let me tell you, he was first honored by his own. He was first honored by his own fraternity, Phi Beta Sigma Incorporated. Then he was just honored again, another award. Listen, we congratulate you.
Yes, we congratulate.
That is major. Honored in the community, honored amongst your peers, your
and
colleagues.
he's a preacher's preacher too.
Yes, he is, man of God.
Prophesying.
Find him on Facebook. I know it's I Am Willie Diggs. I know it's one of them. What did he say? Oh,
don't make me come out there.
oh Lord.
Yes. He know he had that. He bleeds.
He bleeds blue.
Red blood. So.
Okay. Well, okay. So our guest. We're looking
Yes,
at her.
we're looking at her.
Absolutely beautiful.
She looks like she's 25.
Right. Oh,
yes.
Listen, you should see her mother.
Oh,
I don't know what Grandy is doing. She's doing an apple a day. She's walking 2 miles and drinking a gallon of water.
Tracy,
she is doing it all.
What's going on?
Grandy is
okay,
doing it.
let's. You want to go ahead? Well, so do you have a bio or anything? She's going to do her own bio. We didn't get a bio from her though. Okay, well, we're going to make sure she is. Oh, what can I say?
First of all, it was an introduction by the Burnett's.
Yes.
And it was an introduction that turned into a friendship.
Yes.
And
she's like our daughter's godmother.
Right.
You know.
The other godmother.
I mean, she sends presents. She does all this.
She thinks about, listen.
I mean, she's on top of it. You know.
And
sent Chloe her first Bible or something.
Give her first Bible.
Yes. But then she got you hooked up with what we call universal life, which we
is what
will
we're talking about today.
be talking about
yes, you
today.
Did, Toni. Yes, you did.
So we're going to bring her on and want you all to say hello. All right. Hello, Miss Toni. How are you?
Hello. I am well. I am blessed. I am favored. I'm here. I'm excited to be here. This is really like a dream come true because
Really?
I've actually shadowed you guys from Granada Hills, was it?
Porter Ranch.
Porter Ranch. Yeah.
Porter Ranch.
Yes, ma'am.
All the way back to Hotlanta.
Oh my God.
Atlanta.
And I've been, just gleaming ever since, getting to know you guys because it's rare that you get a chance to meet, power couples that are in love with each other.
Thank you.
Wow.
Power couples that are in love, with the Lord and that represent family. You guys are a full-fledged family. In fact, when I met Carlette, she and I were scheduled to meet on maybe 3 or 4 occasions. And the last time we rescheduled, she said, no, we're going to keep this appointment. And it was raining. It was like a torrential downpour, kind of like what we've been experiencing here lately.
And I was in the hospital earlier that day.
Well, there's a caveat. She never told me she was in the hospital because she slipped and fell earlier that day.
Yeah, very
So
upset
when I
about
got
that.
I got there and she told me, and I'm like, oh my goodness, this is not an appointment that you should have kept. It would have been all right to reschedule for the 5th time because here's the deal. We want people that are busy because busy is a good sign, right? Busy is a sign that you're serious, that you are engaged in whatever it is that you're doing professionally. And I really wanted to cancel the appointment, but Carlette refused, and I was there. And we went from that to having Sundays,
Oh, yes.
and I think you had just begun, canning at the time, and so you had all these sweet desserts, and then we just we fell in love from there.
We did.
We did.
We did. And then there's the wonderful Grandee who I met at the hospital. And I just knew it was her sister. Didn't I know that was her mother until she told me it was her mother. I'm like, okay, what are we doing?
Yeah.
But I do have your bio as stated. And let me just say this. You began your career in financial services industry 31 years ago. So I needed to say that because we did not bring on a novice. We did not bring on a novice. She is tried and true. And I totally believe in what she's doing. We have incorporated it in our lives. And it's phases in this. And we're going to talk about that. She's currently a licensed insurance professional and the CEO of the Toni Group, LLC, which provides real estate, investment, insurance, and living trust services. Okay. Her vast experience as a business professional began in corporate America as a real estate appraiser and loan officer. During her 14-year tenure, she became the Southern California regional manager and eventually rose to the rank of senior VP of the mortgage loan origination department for a major commercial bank and Fortune 500 company. Finance is her life, guys. But she is now. You have your niche, would you say now, Toni?
I do. And my niche really came as a result of the downturn in 2008.
Okay.
I often have to remind myself and sometimes my clients that, without a test, there's no testimony.
Mm-hmm.
And so, sometimes you got to exercise that faith muscle, although, it's not what you want to do. You just want the answer. You want the breakthrough. From the inception of the problem. But what happened for me in 2008 is what happened to many, many Americans. And a lot of people didn't have the ability to recover because they weren't given the gift of time, right? And so we know anything about time. We know that is Einstein's eighth wonder of the world. And it is something that no matter what your income bracket is, you can't buy it. Mm-hmm. You ask somebody that's on their dying bed what they want more of, it's never money, right? It's more time.
They want more time.
More time, so that they can go on ahead and take care of that dash in the middle that really makes a difference,
right.
So yes, that is where I really began to hone in on a strategy that I've become an expert in and that I'm very passionate about. But the overall umbrella that's cast upon just life insurance in general, it's an act of love. So yes, Carlette, I'm a specialist in what I do, and it all came as a result of my past experience and that downturn in 07-08.
So how would you define life insurance?
And why do we need it?
Got it. Well, I really see life insurance as an act of love. And not just love for the ones that are dependent upon you, i.e. your parents, it could be your children, your spouse, but it's an act of self-love because there's several different breeds of life insurance. And the new breed of life insurance is where a lot of the emphasis are placed for my current clients, because what it does is it provides for you the ability to have income. A lot of people are concerned about what their income will look like, between the ages of 65 and 85, right? Because typically that's your retirement years, you're entering into your golden years, and most people approach that time as a time of celebration and as a time to retreat, from the hustle and bustle and the mundane, reporting to a job and having someone to dictate to you how your 9 to 5 ought to be spent Monday through Friday. But there's a challenge in that, statistics show, and this is coming directly from the U.S. Census Bureau, that greater than 56% I repeat, 56% of Americans, we're in the richest country in the world, right?
Right.
They're going to retire broke. And so we're going to begin to see the remnants of that if you haven't already within your own family. You know, people are retiring to have to go back to be rehired because, yeah, you know, and that's very common. And you're like, again, I said, a lot of us see that in our own family, you know, whether we want to admit to that or not, you know, but what you are seeing that's evidence of that fact is that people are returning back to work to do menial jobs, you know, and I'm sorry.
No, and you're so true. When we were on vacation in Florida a couple of weeks ago, I was at the Publix, and the gentleman behind the cashier was an older man. Like, he was shaking, and he was the cashier, and I felt my heart. I was like, man. And my heart just poured, and I saw how the other people was. I hate that I had a question because it's like he had to stop everything to try to get an answer. And I felt so bad. I was like, oh, God. And the way they were kind of like looking, you saw the ones with patience, the ones that did not have patience. And I was just like, you know what? I'm going to have patience and work with him. But I thought about that. I was like, he should be relaxing somewhere. And he has to come. He's in the workforce. I mean, I don't know his story, and this was, of course, an assumption. But I was looking like that, and I thought about that.
Hello, Genuine T. Bailey and Ron Cunningham. Welcome to the show, the Chris and Carlette live show. If you all, just a brief interruption, right quick, but if you all have not done so, please like and subscribe on our YouTube page where we can read your comments and your questions, because believe me, you're going to walk away wanting to, you know, if you haven't already thought about, you know, some questions, you're going to want to ask some questions on this show specifically about life insurance and stuff. So go ahead, Toni. I'm sorry, I just had to put that plug in there. Please like and subscribe to our YouTube page.
Now,
yes, please like and subscribe to this YouTube, you guys. I'm so proud of you. Getting prepared for this episode today gave me an opportunity to kind of binge watch, right? Just sit down uninterrupted. You've got the remote in your hand. And I was like, oh my goodness. Well, I didn't know that about them. I'm going to have to ask Carlette, why didn't she tell me that? And, you know, and then Chris, when you sent me the link and you were like, okay, put it on your page. I'm like, I'm going to do more than put it on my page. I'm going to record that. I'm going to be on to one of America's syndicated
we receive
podcast in America. So I speak and decree that, and I believe that because you guys have had some tremendous guests. So I'm very honored to be here, and I want to thank you before, you know, we go into the segment about you know, the tremendous value found in life insurance. And I think you were going to say something, Carlette.
Okay, so I know we were talking about the older gentleman, but before we get to that, about that age, let's start at birth. Let's start, as you call them, the $1 million babies. Let's talk about first a general policy and then building upon that, because these young kids are leaving out of here too. Like over the weekend, again, like Chris said, we were in Alabama celebrating Christian's birthday, and we come back and find out in our little city here, okay, there was a party and then once it was over, 2 teenagers got shot and killed, and 6 others injured. And I'm not gonna lie, the first thing, other than did they know the Lord, was insurance. Did the parents at least have a basic policy on them?
Yeah, you know, unfortunately, these statistics concerning premature deaths are very staggering, and it crosses all socioeconomic lines, you know, and geographic lines. It really just comes down to a change in times. You know, we live in a very fast-paced society, a very greedy society, you know, where people are very emotionally immature. You know, drugs are running rampant, you know, through our cities. And, you know, people are driving faster since we came out of the pandemic. I don't know if you guys noticed, but it just seems like everybody does 80 miles an hour in a residential neighborhood, right? Because they remember what it was like when, you know, nobody was on the highway. So now you've got, a lot of deaths that have come as a result of that. But our $1 Million Baby strategy, I can't say enough about this. I will start with this by saying, when I found out about this strategy, the first thing I did was I put a plan together for both my son and my daughter, who were in their early teens at the time. And I just wish that I had known about this from birth. Because, life insurance has the ability to build cash value. And so when you're talking about cash value and the growth on money in general, it all comes down to time value money, right? And when you're given the gift of time, you absolutely need to be able to harness that and take advantage of it. And so, it's almost like a natural instinct for me now. When I see a mother who's expecting a child, the first thing that comes to mind is you need to get your card to her and you need to have a sit down with her so that you can talk about how she can guarantee that that child can actually become a millionaire based off of compound interest, right?
Right.
So we all know, and most of us know, that what comes along with life insurance is a death benefit. Death benefit typically goes along with what? You passing away.
Right.
So you give an individual a death benefit, they pass, and then the person that they've named as a beneficiary, which are the ones that will receive the money once they pass, they receive that on a tax-free basis. A lot of people don't even realize this. Death benefits are transferred tax-free. That's one of the greatest gifts given under the IRS tax code. The gift to be able to create a legacy and to leave an inheritance unto your children and your children's children oftentimes, right?
Right.
So imagine what a person that's 25 or 35 or even 45 would have to spend for a $250,000 death benefit. That same baby, right out the womb, 15 days old, is going to have to pay a fraction of that.
Right.
Right? And so I've even had parents say to me before, I really wish I would have met someone like you when my children was younger, or when my children were younger, because now they have diagnoses and they have an inability to get insured. And I hear that a lot. When we were children, we didn't hear a lot about some of the diagnoses that you hear of today, but one of the ones that is very prevalent today, and something that unfortunately we need to do a whole lot more research on, and that's autism, right?
Yeah.
Children that are on the spectrum, right? Children that are diagnosed with early diabetes.
Yes.
That's something that the insurance companies really frown upon when it comes to offering an approval for life insurance. But I say this, if you love your children like you say you do, the money that you spend on some of these gender reveals, the money that's spent on some of these lavish $10,000 and $20,000 birthday parties, what always comes to mind for me is this: I wonder if they're putting away $150 a month to ensure that this child always has access to money for the rest of their life. Because see, the way that it's structured, it allows that child to be able to tap into cash on a tax-free basis throughout their lifetime. And all of those numbers are determined once we run an illustration and we put a strategy together. But just imagine that your child, your son or daughter, having an infinite bank. You leaving here and knowing that your children will never have a care in the world when it comes to them being able to lay their head. Or how about this? To fund their college education. Or how about this? Most millennials today, are they interested in working a 9-to-5?
No.
Wow.
Everybody wants to be their own boss, right? And so in being their own boss, the money that can be extracted from these policies will allow people to have the capital to start their own businesses, regardless of whether they qualify for an SBA loan or whether they can raise the capital or whether they have enough operational funds in place, or the ability to open up what they would call like a brick and mortar. These are monies that are that our clients are able to utilize to help their children realize the American dream. And I say the American dream is more than just home ownership, right?
Right.
It's entrepreneurship as well. So yeah, I'm very passionate about $1 Million Baby Strategy, and I'm very blessed to have been there on the actual birth date.
Yes, you were.
Angel, little Miss Chloe Sophia. Yeah,
Yep.
just about that.
So let me ask you this. So when we talk about life insurance, I know my mom took out a policy on me, and we when we got married, we took out a policy as well. But we so explain, like, I think we did a term life. And what's the other one?
There's term
and
life,
whole
whole
life.
life.
So can you explain those before we go into universal life?
Absolutely. So I think that there are a few fundamentals that you must know about when it comes to your options. And the biggest option that's provided where life insurance is concerned is whether you want a term policy, which typically comes in the form of 10, 20, or 30 years. And when we talk about term, it's basically that. It's a policy that's established for a set period of time. So if you purchase a term policy at the age of 20 and it's a 30-year term, then 50 and one day, that term is expired and now you have to qualify for another policy at the age of 51, which will probably be 4 times greater if you're looking at the same death benefit at 51 as opposed to when you purchase it at 20. So just keep in mind that a term policy, it is not permanent insurance, it is for a set period of time. Now, why do people like term insurance? Typically, most people lean towards term insurance because of the affordability. It's much more affordable than a permanent policy. However, what people do not know today, which I'd like to really place emphasis on, is this. It's better to have a term policy than nothing at all.
Right.
You get in where you fit in. If your household budget doesn't allow for you to put away the type of money that is necessary for you to have a permanent policy, get a term policy. These come with a conversion option. So with a conversion option, it says this: I'm going to get this policy now, but my wife and I have a lot of debt, but we've also got 4 children, and I want to be assured that in the event that I pass here prematurely, I have the ability to make sure that the wife and kids are able to stay in the house, they don't have to worry about paying mortgage, and there will be a death benefit in place for them. But it gives them the ability to convert that term to a permanent policy through the 20th year. So in 10, 15 years, they may have doubled their income. Now, life is not what it was 10 years ago, and they have the ability to now take advantage of converting that to a whole life or permanent plan, right?
Mhm.
So the major difference there is that one is for a set period of time, one is for your entire lifetime. The new breed of term also offers those living benefits, and we'll talk about the living benefits a little bit down the line. But I want the listeners to really hone in on the fact that there's a new breed of life insurance. And the new breed of life insurance allows for living benefits. So I saw that Tasha Bailey put in the comments is self-love. See, that's where you have the ability to really tap in and to care for yourself. Because guess what? In the event that you happen to get sick, you may not have enough money outside of what your health insurance covers. So you want to have the ability to what? Tap into that living benefit so that you can extend the coverage. And we'll talk about that a little bit more as well. So that's the long answer. Permanent insurance, whole life insurance is just that. It's going to be insurance that gives you coverage for the rest of your life. And so when we talk about those types of plans, we like to, of course, put emphasis on the cash value that's accumulated in these plans, because unlike any other strategy that I've ever been introduced to, nothing operates like this. People don't understand that this is probably the most longest standing strategy to create wealth, life insurance.
Wow.
And so, we need to partner with these life insurance companies that have been around for 183 years. right?
Yeah.
153 years. These companies were actually the ones that helped to bail out some of these companies, unfortunately, that were suffering during '08, namely the banks. And would you guys know this, that not only do individuals invest in life insurance, don't like to use the word invest, but contribute to life insurance, but your banks also utilize cash value life insurance, and so do your large corporations.
Yes, they do.
And some of the greatest companies known to, I'd say, the world, really. Walt Disney is one. Nobody believed in his dream, to build this wonderful amusement park that we enjoy today called Disney World, Disneyland, Disney Cruises. And so he was able to use his cash value life insurance to birth his dream.
Yeah.
And along came Disneyland.
I need for you all in the chat, if you have questions, please place your questions in the chat, please. And if preferably go to YouTube, but I just want you all to ask some questions.
And also, I want to put your email right now, your contact email, Toni, because I believe people need to write it down now and make plans to make an appointment for their free consult, their 30-minute free consultation. So that's Toni
at thetonigroup.com. And of course, that's Toni with an I. So again, it's Toni at thetonigroup.com.
Okay. I'm going to put that because you need to, this conversation is the starter. It's time for you all to take the next step. You might say, my children are grown, but you got grandkids. You do have grandkids. You can start it if your children don't have the mindset yet, you can have the mindset for them and start something for your grandchildren as well. And then later it get passed on to them at a later age. I know that just sparked some, Toni. Go ahead and talk about the grandparents.
Can you tell?
Yes, let's be creative.
Higher, right?
Yeah, let's be creative. Yes.
Where I've now come to that age where a lot of my friends, I'm not currently a grandmother, but I do look forward to that. I've got a lot of adopted nieces and nephews. Most of my clients, millennial and $1 million baby clients, they call me Auntie Toni.
Auntie Toni, that's right.
Yes, I'm Auntie Toni, and I wear that name proudly. But I wanted to share with you, when you say, grandparents, come on, grandparents. I talked to one the other day, and she was a stay-at-home mom, and, the cheerleader, captain, team mom, she was everything. Now she's got a granddaughter, and that granddaughter has become her world. And what I want to say to you is I encourage you, grandparents, give the true act of love. Give the gift that keeps on giving well after you're gone. The gift that will not only give to your grandchildren, but will actually transcend them if it's set up properly, which is why we offer living trust, because we want to make certain that these death benefits that are left behind, which are gifts that are given to our clients tax-free, right?
Yeah.
These gifts have the ability to continue giving. And so you can put away a nominal amount, $100 a month, $50 a month. And with that money, it gives you the ability to give the gift of love well beyond yourself. Now, you had mentioned something when you said, if the parents aren't ready, well, let's talk about the grandkids. Well, see, there's one little caveat. When you're insuring a child, the insurance companies want to make certain that the parents have coverage too.
Of course.
And so typically what that does is it gives us the introduction to now have the conversation with the parents. And I want to say that, when you talk about the fundamentals of life insurance, you actually have the insured, the insurer, and the beneficiary. So again, the insured being the person whose life the plan has been placed upon. That contract is basically centered around their lifespan, their lifestyle, right?
Right.
Now, when you talk about the insurer, that's the actual owner of the policy. So let's say hypothetically, Susie has 3 kids and 6 grandchildren, and 2 out of the 3 don't want to get coverage. Susie can actually pay the premium that makes her and puts her in a position to actually be in charge of the policy and dictate who that money goes to, hence the third party, which is the beneficiary. And the third party being the beneficiary is the recipient of the actual gift. And so, if a child doesn't want it, guess what? With their consent, of course, you can actually pay the premium and give them the gift of love that keeps on giving. And so that's how that works. And if we have more time, I want to share with you an interesting story.
Oh yeah,
of someone that asked
go ahead.
Well, we got a quick question
got some
here.
questions. Yeah, let's fire away.
Let's fire this question, and hopefully it can all come up on the screen. But he said, Boutiques and Drinks said, I was advised by someone from Prime America that some of their clients with whole life policies were expiring and that they have no pre-quality. And
they are having.
Can you see that?
Yeah. I was advised by someone from Prime America that some of their clients with whole life policies were expiring and they are having to pre-qualify again at 80 years old, and the policies are too expensive for them to manage. Is that a true statement?
Boutiques and Drinks. No, it's not a true statement. So typically, what I know about Prime America is that they lean heavily on having their clients to buy term insurance. And with the money that they save, which would be the differential between term and whole life, they encourage them to invest the difference. So those are term policies that have expired, right? Mm-hmm. And now, again, as I stated, insurance, that rate is typically based on your gender, your age, and how large you want the policy to be. Well, that same client that bought that policy at 80 years old, at 20 years old, now has to pay 4 times the amount at 80, 6 times the amount at 80 years old, and they may not be able to qualify because of health issues. So to answer your question, in short, no, that is not true. That applies to term policies, but not whole life.
Okay, so Toni, I'm making a comment. So early in my nursing professional, I became assisted living. That was one of my first jobs when I got my license, assisted living nurse. And in assisted living, it's cash. You're paying for it. Okay, now how you're paying for it, how you have the money is your business. However, working in those communities, the ones specifically I was in, where they were sitting, eating on their china with their pearls on and their gray hair, and the stories of old, and they live a long time in these assisted living facilities. Come to find out, they were just cashing in policies, and that's what was paying for it. That's right. What was paying for it. And sad to say, we were the employees. We were not residents. Yeah. We were not, and hear me good. It was a nice way to retire. Listen, it's like you had full 24/7 care. You ate well. It was a hotel setting or resort setting. At that time, the range for the monthly was $3,500 to $5,000 a month at that time. Which I'm sure because the cost of living is higher. And it's just nice. If there's a complaint, they'll shut it down because, again, these are cash paying. They dealt with in policies. It wasn't no Medicare, Medicaid paying for anything. But they were prepared. That's what I got from it. They were prepared. So I began to listen to these conversations over tea. I began to listen. And the funny thing about
that's why you're my friend.
Exactly. And it's like, funny thing about it, then I met you. I promise you, right after that, I met you. And I remember in the conversation saying to you, how are they paying for this? And you told me about the code. That's what I want to get to. The code. Yep. And what I mean by the code is there's a code for 401k, because I want to talk about that, versus the code you're talking about.
Come on, girl.
Oh, yeah.
Does this not just sound like the host of the hottest podcast in America? Or does it not sound like a well-informed client / friend? Yes.
Yes.
Go 7702. Clap it up for Carlette.
Yes.
Because once you grabbed a hold of this information, man, you took it by its tail and spun it.
Mm-hmm.
And it is absolutely a tax code. See, what people don't understand is that when they, affectionately refer to their retirement plan, which they're depending on to give them income for a lifetime, they usually refer to what? A 401k.
Yes.
It's not a 401k, it's a 457B, a 403B, an IRA. These are all taxable accounts. They're tax deferred, but they're not tax free. And they limit you to your ability to have access to your own money, your own hard-earned money. And so the incentive is always, well, my company offers me a match. Okay, well, who else is giving that match, right?
Mm-hmm.
And at what expense? Because these other tax codes, namely your 401k, right, or anything that is a lookalike to that. So just remember, when you take on a new job and HR calls you in and they give you your hiring packet and they say, okay, and here are your retirement options, typically what they're referring to are tax deferred accounts. We call those qualified plans. Unfortunately, if you have a catastrophic incident, i.e., an illness, and you need to go to a long-term care facility, and the differential between whether you go in the A facility or the B facility, A facility being the one that offers you the ocean view, that has beauty salon, right?
Mm-hmm.
That has these wonderful meals that you get a chance to choose from, as opposed to being told no on Wednesday. It's Swedish meatballs and boxed mashed potatoes. You see, the difference there usually comes down to what? Money. And so these types of plans that are tied to this extraordinary tax code that provides tax-free distribution on your money in the form of withdrawals or loans, because remember, what you have to consider is this: you don't pay taxes on loans. You don't pay them on home loans. You don't pay them on auto loans. So what the insurance company does is they provide for you a policy loan. Hence, when the money is distributed, it comes to you on a tax-free basis, right? You're giving options. That money, when it is transferred over to you, does not have to be upon death. It offers you a living benefit, which is what Carlette was speaking of. And that living benefit gives you the ability to tap into the money in the event that you cannot perform 2 out of 6 activities of daily living. And you can share with the audience, Carlette, what all 6 of them are, but they're major. Like I have a dear friend whose brother was just diagnosed with ALS, and he's late 50s, and he can't feed himself. He can't sit himself up properly. And so if that were to happen, you have the ability to turn that death benefit into a living benefit that will specifically take care of your needs, or maybe even just help bring someone in, because their mom is upward of 83. Don't you think that they would appreciate having a private duty nurse come in 5 days a week, if not 7 days a week?
Right.
It comes down to money, right? And so these are life insurance policies that will help with the interruptions of life, because in life, we like to say shift happens. And when it does, typically the number one remedy to whatever that shift is having an extra $3,500, $4,500. I mean, some of these policies that we put together enable our clients to get upward of $20,000 a month, up to 50 months. So imagine how that would offset some of the stress and the strain that comes upon a family having that additional money. And greater than 50% of bankruptcies are tied to people that had some form of an illness. And we're talking about people that actually had health insurance in place. See, there's just some things that the insurance is not going to pay. And all of those other ancillary things, unfortunately, come down to what? Eroding someone's personal savings, right?
Right.
Them having to mortgage the house. And so, again, to answer your question, Carlette, yes, tax code 7702 is an extraordinary tax code. It's very comparable in terms of a Roth, in terms of its tax treatment, but there are absolutely no limits to your contribution level. So would you know that, we've got clients that put away over $100,000 a year in these strategies?
Wow. I believe
Wow.
it. I believe
Yeah.
it. One thing now I'm gonna talk about, can we talk about your company in particular?
Sure,
Okay.
absolutely.
So we've already talked about term, whole life. We dabbled on $1 Million babies. Now we're going to get into what we're talking about totally. And it's the 7702 and it's this. Now not only did I meet Toni, but I met Toni primed and ready. I met Toni primed and ready because, we, by this time we're on the third child. I had 401k, but I know with a 401k that once I reach a certain age, if I totally depended on that, they're going to take up to 40% of that.
Yes, they are.
I'm going the tax-free
And
route.
people think that that's their money, right?
Right.
It's almost, when I talk to a lot of people and you say, okay, so how much do you have set aside for retirement? And, they say $500,000, $1 million even.
Mm-hmm.
Well, that's not all of your money. But see, the greatest offense is this. Do you even know how much you're going to have the ability to access, right? Because today's tax rate environment, 38% between federal and state taxes, that's going to wipe out what 40% of what you have. So now we're down to what? Let's call it 600,000. Yeah.
Well,
And with 600, say that again.
Yeah, with the $1 million, you going down to 600,000. Yeah.
Going down to 600,000. Now we haven't talked about, the variables. We haven't talked about the volatility of the market, because these plans, meaning those qualified plans, the one that most Americans have, 99% of Americans participate in tax code 401k, right?
Right.
Or 401k lookalikes. Not understanding that money is tied to the market. And so when you ask someone, well, are you investing in the stock market? They'll say no, but actually you are. Mm-hmm. It's in the form of mutual funds. So it's not an individual stock that you pick, but it is directly tied to the market. So when the market goes down, what else goes down? Yeah. The account. Yeah. So now you may go from $1 million to what? 800,000. Mm-hmm. And then you're taxed on top of the 800,000. And now you're talking about having 400,000 to work with. And so if you're making $100,000 a year and you've got $400,000 of retirement income to carry the rest of your life. So let's say you just cut it down to $50,000 a year. What, in 8 years, you're going to have to report back to a job and you retire at 65, but by what, 73? What are you doing? You're in the line at Walmart in their HR department, right? Looking for just anything to be a greeter. You're looking for somebody to create an ADU. These accessory dwelling units are very, very popular here in Los Angeles. Uh-huh. And it really is only put in place to meet and bridge this affordability gap that we have, where housing is concerned. So everything is going up in America, right? And so if you're believing that the plan that you have, which is tax deferred, is going to allow you to have more money on the back end, I really want to encourage you to rethink that, because chances are the taxes you pay on the money today is not going to be what it is when you're talking about retiring in the next 20, 30 years.
Right.
Not to mention the fact that, you're subject to lose a lot of money because of the downturns that we most recently experienced, like summer of 2022. Phones ringing off the hook. Clients I talk to, some will, some won't. It's just, right now we are on a mission to serve as many people as we can, because this is not a tax code that you can advertise. You're not going to open up Money Magazine, or you're not going to look in the financial section of New York Times or LA Times and they say, you need to call Toni Golden today. concerning tax code 7702. It's really one of those tax codes that was reserved for the ultra wealthy, right? And so if you're interested in a tax code like that, you're going to be introduced to it by way of listening to Live with Chris and Carlette.
Right.
Talking to, Chris or Carlette, or a current client or someone that's experienced some of the benefits of these types of strategies that we put together for our clients. So the advertisement is restricted, but the actual strategy is absolutely available. It's available to everyone who qualifies. And it all starts with what? A phone call.
A phone call.
So
phone calls.
Again, if you all have questions, please, those of you all on YouTube and Facebook, please make sure you like and subscribe. And we want for you to ask questions. So let's see. We got another.
Now, Miss Watkins, I want to say your name properly. Your first name. I don't know if it's Shidell or Kydell Watkins. Do you know her, Toni?
Yeah, yes.
Okay. And so she said, my mutual fund account took a huge hit last year with Dow on its menstrual cycle. and I want to speak on that because, Toni, I was going to use your company, as an example. I did not get hit. I did not lose. I stayed consistent. Even when we were going in that period, I went to my app on my phone and I did not lose anything. I remained consistent. And then when it was time to go back to making a profit, it went back to making a profit. I did not lose anything. And I am a living testimony to what she is saying. It's not a lie. I did not lose anything when the market was going down. I did not lose. And I thank God for that. And going back to the thought of when I decide, okay, I'm going to retire and not having a tax-free program or policy in my life, and the thought of that amount of money that I have saved up, invested, whatever, is taken away when you had all this time to be tax-free by paying out of your own account, by paying it on your own. I mean, you pay everything else.
Right.
You pay everything. You make sure you got your car payment. You make sure you have all this other stuff. It is a thing of priority. It is a discipline. It is. I mean, I could do something else with that money, but there is life after these working years, or even if you decide when I'm done working. You decide. That's another thing.
We have a little girl.
I'm sorry. Go ahead, Chris.
Oh, no, we have a little girl that's crawling around our floor.
Auntie Toni's baby.
Auntie Toni's baby.
Is that the princess?
Yes.
Princess.
Stand up,
Where's
Chloe.
my baby?
Stand up.
Hi! Isn't she beautiful, you guys? I mean, and just as sweet as she is pretty. I always say she is as pretty does. Well, she's got them both lined up.
Thank you.
Oh my goodness.
Oh, she said
it.
it's Shidell.
Yes, Shidell. Yes. Okay, good.
Okay.
Yes. Okay. So I'm so glad that you answered that, that you posed that question, Shidell, because what people don't take into account is the fact that if that money is tied to the market, it's not a matter of if, it's a matter of when. And when it does, you just better hope that you're not on the back end ready to exit and retire. Mm-hmm. So remember I said the 07, 08, when things started aligning themselves, the market that was hardest hit was real estate. Well, that's where my income was derived from. Real estate investor, I was a mortgage broker, and was doing quite well. But when the market fell, guess what else was punished? That little safety net I had over there. So when I left corporate America, I decided to go out on my own and do what I was doing for other brokers when I was working inside of the bank, right? And business was terrific. But one of the biggest decisions that I made that helped me to cross over to the other side was the fact that I felt like I had a safety net. I had my 401k. And that 401k was sitting pretty. I thought at the time, boy, $400,000, that'll be a good safety net. If something should go awry, business doesn't take off like I wanted to, I can rely back on this money. Well, when 08 hit, and I couldn't fund a loan and I couldn't close an escrow, which meant I didn't have any income, it wasn't about supplementing the income that I was making. It was about survival.
Mhm.
And had I had this tax code in place, 7702, I wouldn't have lost one dime of my money because the money is absolutely protected. So if you know anything about the mindset of wealthy people, they don't believe in losing what?
No money.
No money.
Losing money.
Mm.
They don't want to lose any money. And do you know that there are vehicles in place, such as this particular tax code that we're referring to, tax code 70702, has the ability to create a safe net that says if the market should go south of zero, guess what happens? If you had 250,000 in that account, it's just going to hold. So what would happen for me and for yourself, Shidell, you can stop the bleeding. That's what I always say. Don't feel bad. Actually, we want to talk to people that have qualified accounts through their employers oftentimes, right? Or even ones that they set up for themselves, because that means that you're serious about your future.
Right.
You want to really experience these golden years, but you got to make sure that that money is protected against a downward market, right? So if the market should spiral and you've got all these gaping holes, and you went from, I had a client, she's a nurse. She kept saying, we'll get around to it. We're going to get around to it. I'm tired. I worked a late shift. And I said, but you know, that money is subject to be eroded by any shift in the market. And she lost a grand portion of that $350,000.
So she
She
said,
quickly,
okay. Oh, I'm sorry. I didn't mean to cut you off.
no, you go ahead. Go ahead.
No, so Shadell said, fortunately, my children and grandchildren have our Roth IRAs. When you know better, you do better. Started them early. My mom didn't know, but now she does also. But she's teachable and eager to learn more.
Awesome. I
Yeah.
think that that's very commendable, and your mom is very forward thinking. And again, like I said, this tax code is very comparable in terms to the tax treatment that's provided through a Roth. However, you know, Roths are capped, and so for someone, you know, that's earning, you know, well over 100, 250,000 a year, you know, it may not be enough.
Mm-hmm.
It may not provide enough for them to have a comparable lifestyle when they get ready to retire. So, you know, we absolutely believe in diversification, and I think it's good, you know, that you stay diversified, but absolutely set aside some time to take a look at this tax-free bucket of money that you can accumulate for yourself,
Yeah.
and, you know, with whatever's left over, leave as a legacy.
Mm-hmm. So what is, when someone, you know, calls you, hey, I'm interested in this universal life policy and what other products you have, what is the process like? How do you, you know, you initially do a phone interview and then you see, what is the process like when you?
Oh, I'm so glad you asked. Well, currently, thanks to technology, I've got a Calendly link. And so the first thing you need to do is book the appointment, right? And so what we'll do upon the inception is do an intake. So we'll get an idea of what your current income is, what it is that you're looking to acquire, you know, by way of participating in the strategy. And we'll do a little fact finding, and then we'll set up a subsequent appointment. And at that time, when we come together, we bring the actual strategy. So I've got a really strong team that stands with me, and we go to work and we strategize, you know, how can this $500 a month or $1,000 a month, like I said, we have some clients putting away $25,000 a month. It doesn't matter what your income is. We just want to encourage you to get in where you fit in and get started, because you don't know what tomorrow brings. I've got a young lady that we spoke with probably 6 months ago. And I tell you, one of the biggest things to overcome when you're talking about this strategy is the fact that people think it's too good to be true, right? And then you have some that just want to do their own diligence and they say they'll circle back. I always encourage people, don't think too long, because you don't know what life brings. I just got a phone call yesterday, Sunday, yesterday, Sunday. I was at the nail salon that she passed.
Oh.
and has no life insurance.
Oh.
And she's their parents' only child, their daughter, who was also helping to run their major corporation. Now, for the life of me, I don't understand why, if you've got that kind of money coming through the door, somebody wouldn't have taken the time to plan, but you'd be surprised. Every situation is different. So again, we encourage you, call, book the appointment. The nice part is we can meet via Zoom, right? And so in meeting via Zoom, we're going to go through the educational part. That's very important that you understand it. As you can hear, Carlette sounds like she's a licensed professional in life insurance.
Right. She might as well get a
Because
license.
she may as well. I've been trying to encourage her to do that for quite some time.
I
So
send
we'll
all
be
the
happy to-
business to you, Toni. I send it to you.
I know, but you know what? It's because you're passionate about it.
Yes,
And you
I
know why
am.
you're passionate about it? Because you believe in it, and you believe in it because you understand it, and you took the time
Yeah.
to schedule a face-to-face meeting. When we met, we weren't Zooming. I
Yeah.
was getting in my car and trekking over the hill and coming to
Yes.
the valley after an hour's drive in the rain to
Yes.
meet someone who has become a very dear friend to me. And we met face to face. But nowadays, you don't have to meet face to face. You can meet via Zoom.
Right.
That's right.
Typically, the time, 30 minutes, 45, an hour and a half, depending on the level of questions that the client may have. We can tweak and modify the illustration to customize a plan that works for you. So usually what I lead with is asking the question, what do you want your check to look like?
That's good.
What do you want your check to look like? What are some of your lifelong dreams? Do you have a plan in place, to take that trip to Africa for 30 days?
Wow.
Oh, I see. So you're going to save, and then you're going to take it from the savings and then hit the reset button and start saving it all over again. Well, wouldn't you be surprised to know that there's a plan that will allow you to use somebody else's money and still get to Africa and allow your account to stay intact and to grow unscathed?
Can we use some of your
Uninterrupted.
money to go to Africa?
I'm planning some things with my living benefit. As you were, Toni, keep talking.
I hope it involves your husband. So Miss Toni, I was wondering, so if I have this money in my 401k, right? And for example, my employer, they match the funds, right? So, and I want to can I pull my money out of my 401k and place it into your vehicle? If not, do I just shut down giving to my 401k and then just use those funds that I would have given to my 401k through my employer and reroute them to the universal life? Does that make sense?
It makes absolutely perfect sense, and it is a two-part question. So first things first, can I take my money and move it into this account? Not prior to you leaving the job, right? So once you leave the job, you have the ability to do so, but remember, as I stated earlier, they apply rules to your money. And have you heard of that 59 and a half rule that says if you're not 59 and a half, you're going to be subject to what? A penalty. So there may be a penalty. So the ideal person or situation is for someone that has an old 401k. I get this all the time. Well, I left this job. I was at Rockwell, name all these corporations that they were at many, many moons ago. And the money's just sitting there in a different account. I don't like to use names specifically, but it's sitting in an account, it's being managed, and they haven't moved the money. You can move the money and protect yourself from what? The volatility that the stock market may bring, or future taxes, which, we look at and we know that are going to be a little bit higher today than they are 20 years from today, right? So you've got to wait until you either have an old one that's parked over there that's being managed, or until you leave the job, right? That's an ideal situation. And if in fact you are in a plan and you want to make a switch, that's why we want to know, are you currently investing in your 401k? Because if you are, we're going to help you to reallocate those funds to a tax-free bucket of money, right? And it's going to give you guaranteed lifetime income based upon the number that you choose. And so one of the things I like to always say too is typically the numbers that are illustrated when we have our sit down are very modest. Insurance companies don't like to overshoot that number. They typically want to give you a number that, of course, is based on all of the things that go into determining the outcome. But again, they're going to give you a number that's going to say, hey, listen, you can safely rely on 160,000 a year, and this is going to pay you contractually till age 120. So a lot of these carriers that we partner with, they pay tax-free lifetime income till age 120. So what you've done is you created your own personalized pension plan. So a lot of jobs aren't giving out pensions nowadays, right?
Right.
Because folks are living longer. There's a lot of people that are over age 100, but 100 years ago that was unheard of. But now with the wonderful foods, no GMOs, and living these healthy lifestyles and understanding what prayer and meditation will bring to your longevity, people are unfortunately outliving their money unless they created their own private pension plan. So let's meet both sides of life, right? Let's have a holistic approach. Yes, we want to make sure that we are healthy in body. And yes, mentally, we want to make sure that, we are sound and we're blocking out the noise and bring on distractions and breakdowns and depression. But let's align the money to go along with that. So that when you're living in your older, healthy life, you don't have to be stressed out by not having enough money to take care of the essentials that are necessary in life. So I appreciate that question coming from you, Chris, and I hope that I've satisfied.
I'm gonna tell you now, Toni.
I had another question.
We're gonna have a sidebar because we got to refigure some things, re-strategize over in the Edwards house.
Another question.
But no, I just make a comment now.
You could have held that question.
No, it wasn't a question. It was a statement.
You could have held that statement.
I'm sorry, baby. I'm sorry. You're right.
Shoot.
Before
I forget. Okay, no, I was just saying. I'm getting old.
No, you're getting better. Let's go.
You're
getting better.
I got a birthday coming up on the 16th. I'm excited about. Toni. Hey, I hope. Hey, Toni, I hope she.
Birthday.
You said what?
And your baby's birthday, your firstborn.
Right. Yes, and 3 of us: Chloe, Christian, and myself. I hope she takes some of that universal life money and take me to Africa or something. Take me to one of these islands. You need to withdraw some of that money. But no, okay, so I got another 2-part question. Okay, so the first question is, when it comes to insurability, a lot of us may not, because of our lifestyle, we may not think we're able to be insured. How difficult is it for someone that comes with a type 2 or high blood pressure or something like ALS, or how difficult is it to get them insured? So that's the first question.
Or even HIV.
Yeah, or HIV, or anything to that matter. And then my second question, we're going to turn the page and let's talk just briefly, because it's I don't know how much time you have, but let's talk briefly about the importance of a trust, because you also do trust. So go ahead.
Oh, we can't do that.
We can't do that?
I'm going to tell you.
Okay.
Don't answer that question. Okay. You're actually hitting on a thought of mine. Because there needs to be a part 2 to this.
Okay. So she's just put the mute button on me.
Answer all the questions except the one about the trust.
Well, just the first one then.
Yes.
Okay, insurability. That is a very big word. And let's define what that means. Your ability to become insured, to take advantage of the benefits that come along with life. So what ends up is that the insurance company, once you take an application, is going to go through a process in which they're going to underwrite the file. They're going to take a deeper dive into your medical history and some of your lifestyle choices. And they want to know that who they're partnering with is going to be around for a while. Because if that person happens to die prematurely, they're obligated to pay that death benefit, right? So we want to make certain, or they want to make certain that a person is healthy, but there are levels to this now. You're going to be given a health rating. And so the healthier you are, the less you have to pay for the death benefit or the benefits that come along with it. But it doesn't mean that a person that has type 2 diabetes and maybe is hypertensive and maybe they suffer from some type of back injury. And so periodically they have to take, a prescription that helps them to manage their pain. I'm naming things that the insurance company is going to look at, right? All of the things that we believe are important. And when I say we, I mean the carriers that we partner with. If a person, unfortunately, is not given the gift of getting an approval because they suffer from a debilitating condition, there's policies that you can use that will give you what they call guaranteed issue, right?
Mm-hmm.
Guaranteed issue policy is going to be a lot more costly because the insurance company is partnering with someone that is a lot more risky, right? So again, the insurability is important. All of those things are going to be looked at, and there are several different carriers that will insure depending on what the situation is. And so as a broker, we have the ability to partner with several different carriers. And so if it doesn't work for one, we'll then take it and move it to another carrier who will. I'm working with a couple of clients now. And do you mind me sharing your story, Carlette?
I was hoping you would, because I'm ready to share. Go ahead.
Okay, well, I'm going to let you share it, from the client's viewpoint. In fact, why don't you open with that and then we'll talk about what took place on the back end in order to get you your approval.
Okay. So again, when I met Toni, I was ripe and ready because I have heard about it, but it was about shopping for the right program, the right company to invest my money in. I had tried at least 2 before getting to Toni. Third one was Toni. And so it was the perfect fit. We didn't have to talk long. I was helping her and her. I was like, I know the rule of 72. so thinking about that, and the rule of 72, that's a whole nother other topic, but it's very simple. But the thing about it is when I went through the process, and like she said, you fill out the information, and they want to know your medical history. Well, my medical history at the time, and it still is, but the medical history was in 2006, which you all, if you've been following us for the past 3 years on Chris and Carlette Live, you know my story. I was diagnosed and treated for stage 3 breast cancer at the age of 30. Okay. That was rare. And so Toni fought for me. When I tell you she fought for me, she fought for me. And because they did deny me. And also we had to really fight, not so much with the doctors, but they're busy. But between me calling, Toni doing 3-way, Carlette doing 3-way, I was approved. I was approved. For one thing, it was so many years out. The fact that I had 2 babies after breast cancer was actually to my benefit. It showed health, and it showed progress, but I didn't, it was just a good thing, but she fought because I really did get denied. And she was like, there is no way. And she went back to them and got more information from the doctors. And then I was approved. Now you think I'm going to let that go? You really, because it's like I just said, it's time to re-strategize and figure out, another level. So, did I tell the right thing, Toni?
Oh, absolutely.
Okay.
And I was committed from day one because the guidelines stated that if you were cancer free for 10 years,
yes,
that, you were worthy of receiving an approval. Now, it may have been rated as a result of your past, history of having breast cancer. And so with that, I just went back in and I challenged, the underwriters, and I challenged them by essentially having them to give me the things that gave them the level of comfortability in providing this coverage for you.
Right.
And so it always comes down to medical records. And that's when I got to know you real well, because you had doctors in Indiana at the time.
Yep.
You had doctors in Atlanta, and you had doctors in the Los Angeles area.
Right.
So we had to gather medical records from all three doctors,
Right.
some being a primary care, then one was an oncologist, one was some other type of specialist. So you and I were lockstep in the process.
Yes.
And the reason why I mention that is because it's very essential that when you meet this level of strategy, you do so having the mindset that says, it's going to work for me. You got to have a money mindset.
Yeah.
That's not one that comes in with, a lot of trepidation and doubt and procrastination, because guess what? Somebody else wants this strategy, and somebody else is going to book that appointment on Calendly. And when they do, it may not be that, it's done in enough time that you're able to survive an incident similar to the client that we met with over 6 months ago, who passed away on Friday. Again, I repeat, this was their parents' only daughter, and she helped to run their company. She passed. She didn't have the opportunity to take advantage of this.
Oh, wow.
Carlette, you're not an ordinary client. You fell the day that we met, and you were with child, and you kept that appointment. And it let me know then just how valuable this was to you, and just how important you were, and just how committed it made me want to be in going to bat on your behalf. And I'm very proud of the fact, that we put that plan together, for you, over how many years has it been now?
Oh, it's been,
Well, Chloe,
let me look on my app. No.
I just know that universal life policy got a little money in it, so I'm ready to go on my vacation.
You're ready to take his world tour.
That's it. You better withdraw some of that.
No, you know what?
Your baby has other plans, but you know what? It absolutely can work to serve, for those things that you have on your bucket list, i.e. that trip to one of the other continents, right?
Yeah, we want to go on a cruise next year overseas. I don't know. Jeez.
Oh,
how about this? You get to use somebody else's money. You don't even have to deplete your own savings.
Oh, so I wanted to mention also my son came across some inheritance money.
Yes.
And he's 18, and he had a leg. He had a leg issue going on, and he was also insured. So I think the one take that I get out of going through the whole underwriting process is that you have to have patience, because I was getting frustrated at Toni, and it was just, I'm like, why they keep asking me this information?
It's not personal. We had to convince him, huh, Carlette? Yeah. It's not personal. These are just things they want to know, because your son is taking some prescriptions, and if it's not related to this, and we just had to keep going back with some very strong letter writing and appeal some of the initial decisions. But I am so glad that you have a wife that's encouraging, one that's wise, and one that has experienced this process to some degree, because it gave her an even deeper level of confidence in knowing that it was going to happen. If that assignment was given to me, it was going to happen, and it did. Yeah. And can we talk a little bit about Christian's strategy?
Sure, go ahead.
Go ahead.
And we don't have to, give numbers, but here's the level of intention that goes in when we're met with an opportunity to deepen someone's legacy, right? His grandmother left him an inheritance, and that inheritance yielded him enough money to start his own strategy and to put it together per the direction of myself and the advice of his parents. And what we've been able to create for him is the ability to give him that exact same gift every year for the rest of his life. So you talk about his grandmother leaving a gift. She left a gift that can continue giving to him 50 times over, 40 times over. And it's all because, again, his parents were forward thinking. They knew that there had to be something more than what was offered to them, the commercial bank that I think you went into, right, Chris?
Right.
Yeah, and I'm just so pleased to say that this is a young man that is on the right track. I mean, we already know that his mindset is like the rich and famous already, right?
Right.
So he's expecting to live a very grand lifestyle. And I
Wow.
think that the pathway that you guys have placed him on, not I think, the pathway that you guys have placed him on is going to help to enable, his gifts and dreams and passions and ambition to be birthed, in his lifetime. And then prayerfully leave a legacy for
Right.
those that come after him.
Right.
And so
Exactly.
again, life insurance is more than a death benefit, you guys. We got to begin to change the mindset. It is about the living benefits. It's about creating a pathway to financial independence and freedom. It's about removing some of that stress off of us that we carry because you've got more month than you've got money, right?
Yeah.
Let's begin to have open conversations and dialogue about this. And this is what I challenge people with all the time. I say, can you imagine if for every funeral you ever attended, that those first two pews, which is typically the family, right? They were left with a gift of 10,000 each, 100,000 each. A wife, who never has to worry about whether she has the ability to stay in a home because the house was paid for. There was some mortgage protection placed in there, or how about a mother knowing that, hey, my kids can still go on to college because we've established a plan, or that death benefit gave them the money to do the things that they want to do. We all deserve to live a life of financial independence, right? We all deserve a life to be able to go well beyond what's defined for us in living a good life. Well, that may not be what your child determines to be a good life, working a 9 to 5 for 30 years. Maybe they want to start their own. How about this? I got a 32-year-old firefighter that called me last week. He needed $25,000 because an opportunity came past his station to allow him to open up an IV drip therapy company.
Oh.
Wow.
Yep. And he was able to access $25,000 tax-free with something as simple as a phone call, no exorbitant paperwork. All they really wanted to know is, what account do you want us to deposit this money in? And he's already inked the deal to open up his first IV drip therapy company. That's something that's trending now, right? But again, it gives access to these kind of things. So I'm just really excited, to share more about who needs life insurance and why they need life insurance. And the answer to that is everybody needs life insurance. If you've got a pulse, you've been given the gift of life. As soon as you're carrying forth a life, you young expected mothers, as soon as you get that first grandchild, you grandparents, think about the gift that gives and keeps on giving, and that transcends time, that gift of love, and that is life insurance.
Yeah.
And
Well,
so I'm very honored.
well, it's 9:23 and the hour's getting late.
I had somebody text me
Oh, what?
a question.
What's the question?
Okay, this will be the last question, Toni.
Okay,
So
sure.
The question was, anyway, living this now with mom, she has a policy that pays a specific dollar amount per day for adult daycare, in-home care, nursing care, and respite care. Look, I called to ask if I could sign up for that policy, but of course they told me that policy no longer exists. Is that true?
Probably she may be referring to long-term care. Long-term care policies are they're a little bit more difficult to obtain today than they were, 10, 15 years ago, and they're very pricey. And so if I had to take a guess, I'd be guessing that she's referring to a long-term care policy. But she can absolutely email me at Toni at the Toni Group.
Yep, I sent her your email.
Toni?
Yeah, and then we can have a discussion about what that looks like and maybe provide some other options for her. She may want to take a look at a plan very comparable to the one that you have, Carlette, because again, it offers those living benefits. So, you happen to get sick, you happen to become ill, or injured, or you can't perform 2 out of 6 activities of daily living, you have the ability to tap into money that was established for you from the onset by way of the death benefit and advancing it to what we call a living benefit.
Well, I will tell you this. This is one of those that's on your list that I've already given you this name and number. But she's listening, and I send her your email, and she's going to send me her email. I'm going to do like a introduction email again with the three of us, and we go from there to definitely ask that question, answer that question, and also present to her what you have to offer even for her. There's a part 2, Tony.
Yeah, we're gonna have to do a part 2.
We got to do a part 2.
Yeah.
But I want the part 2 to be about the trust and the living will.
Okay.
Which I know is part of your portfolio in your profession. And let's talk, because this month is March money theme. March money and family wealth. That's the theme for this month. You know, it's March Madness. No, ours is March money.
Right.
So March money. So let's talk offline about your availability, whether it's this month or the next month, but there is a part 2 for trust and living will.
And if you all like the content that you're hearing, make sure you like and subscribe and share on our on our YouTube page, please. And we thank you all for everyone for streaming. Any final last words, Toni?
Yes, I again want to reemphasize that life does bring about interruptions, and there are ways in which you can hedge against those interruptions. And typically that's by putting money and having access to money. I do believe that you should leave an inheritance unto your children's children, or even a charity if that's what you so choose. And I do believe that you, in every working class American, should have the ability to retire and to have a retirement that they've defined, and the one that they don't have to worry about outliving. And so with all of these things being said, all of this can be met under the umbrella of one strategy, one policy that provides the financial independence that we all deserve and that we as parents all want for our children. So if you say you love them, you say you love your spouse, if you are in love with those that you know are dependent upon you, then show it. And you show it by simply, making that appointment to determine what type of plan works best for you. Again, remember, it doesn't have to be one that is unaffordable, that's going to put you out of your house. And like I said, we've got clients that put over $100,000 a year away in these types of strategies. It's just a matter of determining where you fit in. And so that's what that consultation will provide for you. It will absolutely provide for you the opportunity to leave that conversation knowing exactly what's needed to give you that measure of confidence, should I say. So again, thank you guys. I really appreciate the opportunity to be here with you. This is like a dream come true, seeing you guys all the way on the other side of the country. Yes. I miss and love you, and can't wait, to hug y'all and just, be like family.
Yes. we want to come out there, but I want to come out there. I don't know about Carlette, I don't know. Anyway, but I want to come out. It's too cold.
Oh, we're going to get you guys out here for the game. So I don't know what your team of choice is, but, I've got those season tickets for the Rams and the Chargers, and I would love for you guys. Uh-oh. In fact, you know what?
Yes, ma'am.
I'm going to fly you guys out here. I'm making a public declaration.
Uh-oh.
I'm going to fly Chris and Carlette out to Los Angeles, and you guys are going to go to the SoFi Stadium to enjoy either the Rams or the Chargers or whoever they're playing. Who's your favorite team?
I would say
I like the Rams. We have one of our friends works for the Rams. He's from Gary.
Okay. Yeah. All right. We're going to sit on the 50-yard line, VIP.
All right.
And celebrate the way that we all should have the ability to do, because I'm just grateful for you guys. I just can't thank you enough, for all that you've done in support of my business having me here tonight is a treasure and a treat. As you can tell, I
you as soon as
you should get her beauty rest.
Right.
All right. Thanks again,
All right,
you guys.
take it easy.
But call me back.
Okay.
All righty.
Bye-bye. Wow, what a show. What a show.
That
what a
was amazing.
show. That was good. That was good. Hey, y'all, we appreciate all our viewers, even the new ones. Make sure you like and subscribe. We do want to go syndicated. I do want to go on XM radio every, let's say, every Saturday or something like that. So if anyone knows,
keep our Monday nights.
I don't know. Depends on their schedule, but I would like to because we do this one time a month, one time a week. I'm not sure. I wouldn't want to do this every day, but make sure if anybody has any contact information for them, make sure you reach out to us or reach out to them as well. Say, hey, we got the Chris and Carlette live show that's ready to be syndicated on XM radio.
Say they've been true to the game.
Yes.
This
yes.
is year 3.
Yes.
This is year 3.
Yes.
And every Monday night, So listen, we're about to close out. Just let you know, I'm putting it out there. There is going to be a part 2. Either it's going to be this month or next month. It's going to be real soon. Talking about the living will and the trust. And listen, we love you all. We appreciate you all. Please go and subscribe to our page on YouTube. The reason why we are focusing on YouTube because we are about to leave Facebook and just only use it for marketing purposes and do everything, all live shows on YouTube. And that's what we keep telling you all every week. Go subscribe on YouTube. And I see some of you all did that, and we appreciate you. But go now and then share with your friends. Share the YouTube link. Text it onto their phone and say, hey, this is a page you all need to subscribe to. They come on every Monday night. It's Chris and Carlette Live, Life's Interruption, the good, bad, and indifferent. We're going to talk about it. Hear me good. We're going to talk about it. Listen, we love you. We appreciate you. And like I tell you every week, please pray. It's praying time. It's beyond praying time. Seek the face of God. Call upon him while he may be found and while he is near. We love you. We appreciate you. And you take care of yourself. And we will see you next Monday.
Thanks for joining us this week on Chris and Carlette Live. Make sure to visit our website, chrisandcarlette.com. If you're on Facebook, share this broadcast. If you're on YouTube, please subscribe to our show. You may also find us on Apple Podcast, where you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes. Or if you'd simply tell a friend about the show, that would help us out too. Let us stay in contact with you by texting CNC Live to 474747. That's CNC Live to 474747.
CNC Live.